you please start. Indrakshi, you please
Okay.
start.
Okay.
A very good evening, everyone. We welcome you all to the concluding and the third banking webinar in this July month 2024, organized by the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India today. And we are really honored and privileged to have with us as our guest of honor, Sri Rishikesh Mishro, sir. He's the General Manager, Risk Management, Union Bank of India. Our very own speaker, CMA Dr. P. Sivarama Prasad, sir. He is the former Assistant General Manager, State Bank of India. Welcome you, sir. From the Institute, we are really privileged to have with us our Vice President, sir, CMA TCA Srinivasa Prasad, sir. We welcome you, sir. Our Chairman, sir, CMA Chittaranjan Chattopadhyay, sir. We welcome you, sir. We have our Additional Director and HOD of the BFSI Board, CMA Dibyendu Roy, sir. And also we have our BFSI team members as well. So we welcome all of you. So just before we start, we are playing the Institute anthem and then we will continue with the program.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति।
So now I would request our Chairman, sir, CMA Chittaranjan Chattopadhyay, sir, for his address. Sir, please.
Thank you, Madam Indrakshi. Very good afternoon, evening to you all. I welcome you all the participants here in this, the penultimate program of the July month, which is being observed as the banking in month from the BFSI board of the ICMAI. We are very much privileged to have with us the Vice President of the Institute, CMA TCS Prasad, and of course the person who is always been architect of many programs and many for activities of the BFSI board, who is enthusing us, CMA Dr. P. Srinivasa Prasad. And we are going to have another personality from the banking sector, the doyen of risk management, Sri Rishikesh Mishra ji, who is the General Manager of Risk Management Department of Union Bank of India. For certain technical glitch, he is yet to join, but we are trying to take him in our studio. Therefore, definitely we hope and trust that he will be joining with us. And of course, I must congratulate all our members and all the participants here, those who are continuously showing their patience of the digital banking. And as you know, the today's session is on open banking. This open banking is one of the very important facets of digital banking. And over the years, the role of cost accountants, that is CMAs in India, has undergone a significant transformations, expanding beyond them their traditional responsibilities. In fact, previously they regarded as financial experts, financial planners, as also cost controllers and cost auditors. We are considered to be there, but we have evolved to become conscious keepers of the nation. And that way, CMAs have been evolved to become conscious keepers of the nation, offering assurance and expertise in various domains. Today, CMAs play advisory and consulting roles, demonstrating their ability to adapt to the changing business landscape and embrace technology as an enabler rather than a disruptor. And technology is fueling India's growth 2024 in budget. The technology landscape is rapidly evolving and becoming more skill intensive. India is well positioned to cater to all these emerging demands thanks to the deep-rooted success in the technology sector, focus on creating upskilling, reskilling initiatives, and the overall success of the GCC, as you know, Global Capability Center landscape in the recent years. Some of the key announcements in this Union Budget 2024 relevant for the technology sector are allocation of funds towards India's AI mission, artificial intelligence mission, as you all know, data governance and management by utilizations of sectoral database and technology tools under the Digital India mission. Thus, digitalization of taxpayer services and establishment of an integrated technology platform for IBC, insolvency and bankruptcy code, as you know, in the ecosystem of IBC, it is there. With these concerted policy efforts, India is poised to continue to ascend as a global hub for technology and innovations. Here on these aspects, when open banking, a fintech initiative we are discussing today, which will be dealt by, intricacies will be dealt by our own member, Dr. CMA P. Sivarama Prasad. This open banking is also known as open bank data, which is a banking practice that allows third-party financial service providers to access consumer banking, transactions, and other data from banks and NBFCs through APIs. Open banking allows consumers, financial institutions, and third-party service providers to use the network of accounts and data across institutions. Customers must agree to share their data by checking a box next to the terms of service screen on the app APIs of third party. Even providers can get the access to the customer's data instead of centralizations. The concept of open banking makes large established banks to be more competitive with small and new banks. Large banks will have to put effort to adopt new technologies to provide better customer service at lower costs. So to conclude, India stands as a testament to the transformative power of technology and innovations. As one of the largest exporters of IT and BPO services globally, the nation has not only demonstrated its strength, but has also carved a niche for itself in the international arena. Hence, I'll be requesting all my CMA colleagues and all the participants to use this big opportunity in their life, in their individual profession. With this, I again convey my heartfelt thanks to all the participants here, as also the speaker of the day, our guest of honor, and of course my own vice president for being over here and to grace the occasion. I again convey my gratitude to my president and the whole council for giving me an opportunity to serve the profession as the chairman of the Banking, Financial Service and Insurance Board. Thank you.
Thank you so much, sir. So now I would request our Vice President, sir, CMA TCS Srinivasa Prasad, sir, for his special address. Sir, please.
Thank you. Open banking. Namaskar. Honorable President in absentia, CMA Chittaranjan Chattopadhyay ji, Shri Rishikesh Mishra ji, CMA Dr. P. Sivarama Prasad Garu, members of the Institute and all others. It's of course an honor for me to be amongst all of you in this event. Today, let's explore the transformative impact of technology on India's financial landscape and its broader economic implications. All of us know services constitute the significant portion of India's GDP presently, with the nation leading the global stage as the largest explorer of software services. This prominence, how it has come, is further reflected in the expansion of digital banking, driven by advancements in the technology and increased internet penetration and better connectivity by the service providers, especially with respect to the data. Integration of data has definitely and notably reduced the cost and broadened access to financial services. One of the prime example is the UPI, Unified Payment Interface, all of us know, which has revolutionized the payment systems by offering a cost-free, seamless, that's very important, seamless method for transactions across the country. The National Payments Corporation of India, we call it as NPCI, that has played a crucial role in this by facilitating all the UPI transactions and advancing the goal of reaching the underserved population and the unreached so far. Last mile connectivity, normally we call last mile connectivity, we have a last man connectivity these days. Open banking, the subject of the discussion. This is as CMA Chittaranjan Sir was telling, it represents a major shift, how financial data is accessed and utilized. It allows consumers to securely share their financial information with third-party applications, fostering certainly innovative financial experiences. Unlike the traditional model where banks had the exclusive access to the data, open banking democratizes access, enabling a more competitive and customer-focused banking environment. Yes, this system certainly has the potential to reshape the banking industry's competitive landscape and enhance consumer expenses. However, all of us know any opportunity comes with its share of risk. The broader sharing of data raises concerns about the privacy, security, necessitating overt measures to safeguard consumer information and consumer protection. Fine, that is being definitely taken care. The fintech revolution driven by the open banking emphasizes customer-centric approach, leveraging APIs, application program interfaces to enable better data management and personalized services. Large banks, through strategic investments in technology and talent, are adapting to remain competitive in this evolving landscape. Furthermore, as it was explained by CMA Chittaranjan Sir, there is a significant potential for CMAs to play a vital role in profiling and protecting high-value customers, ensuring both enhanced service and data security. In summary, as technology continues to advance, that will advance, certainly. It is reshaping the financial sector, offering unprecedented opportunities for innovation, while also presenting new challenges. Embracing these challenges with a focus on security, we should not leave that point. With a focus on security and customer-centric solution will be the key to navigating this dynamic landscape. We have to navigate. Our colleague in the council now, I'm proud and then I'm duty bound to say CMA Chittaranjan Chattopadhyay is totally committed and passionate to the development of the profession and of course leads from the front in the BFSI activities for all of us. Wishing this event a grand professional success. Jai Hind.
So much, sir. Thank you so much for such a nice and inspiring special address on this topic of today, open banking. So now I would request Simi Chittoranjan Chattopadhyay, as our chairman, sir, for the special announcement that he will convey to us. So, please.
Yes, I am just informing all our esteemed guests here and our vice president that Mr. Mishra will be joining. He is some technical glitches is being already being being resolved. But by this time he joins, we request Dr. Prasad to start. And when he will be joining, my request to you, once he joins, kindly just give a pause to your presentations, and we shall be listening from Mr. Mishra. Then we shall restart. So for this reason, just I'm having this announcement to you. So let's start the program. By this time, we are trying to set right the glitches faced by our honorable special guest of honor. Thank you.
Okay. You please give me the signal as
Sure.
and when sir comes.
Sure, sure.
Okay, sir. Madam, my PPT is visible, madam.
Yes,
Yes.
sir, it's visible.
My voice is audible.
Yes, sir. it's
Yes,
visible.
Prasad Garu, PPT visible, voice audible.
Thank you very much, sir. And good evening to all. First of all, thanks to Vice President Prasad Garu and BFSI Chairman Chattopadhyay Garu for giving an opportunity to discuss about the latest technology that is happening in the banking arena. So now in future, the banking system means fintech only. Earlier, this bank is established by Nizams. This bank is established by King of Travancore or Bikaner in Jaipur, like that. So many banks are floated by earlier kings. In the future, banks are going to be floated by IT companies only, not the traditional bankers. So fintech is one of the area, particularly the open banking is one of the area in fintech areas. Today, I will discuss in detail about the open banking architecture, and almost all banks in India, they are adopting this type of initiative to increase the penetration of the banking business and to increase the market share, etc., etc. Now coming to the subject, the open banking architecture. If you see the State Bank of India, recently they have given us some announcement. Within 10 seconds, we will sanction the loan up to 50 lakhs for SME sector. That is true. That is happening because it is on account of a database. Database of the customer is readily available. I don't require any financial statements. I don't require any trading account or profit and loss account. All are instantly available in the system, means I need not wait for sanction or processing the loan. Loan from banks in minutes or in seconds also. SBI launches SME Digital Loans Program using the data from tax and GST returns for quick credit assessment and loan approval up to 50 lakhs in 10 seconds without human intervention. Without human intervention also. So the man is replaced with the machines. The man is replaced with the technology. So earlier, the credit officers are there, credit analyst is there, so many big designations are there. In future, all these things are taken care of by the IT system only. That is the power of the IT system. That is the power of, we have to explore, we have to use that IT system in an optimum manner. Then only the people felt happy. The customers of the bank will also enjoy the banking system. Now, I will start with the backdate. Earlier, banks are in closed system. And now the banks are in open system. Earlier, if at all I am having an account with any bank, nobody knows which bank, which account, how much balance is there. All these things, nobody is revealed that type of confidentiality, that type of secrecy the banks are used to maintain. Today, it is a closed, not a closed system. It is an open system. Because in the closed system, some disadvantages are there. And in the open system, the disadvantages will turn into advantages to the customer as well as to the banker also. Particularly in the past, I joined in the State Bank of India, that is India's largest bank, in 1980. Before few years back, the branch managers are called agents. They are not called as a branch manager. Once the customers are there, they used to interact with the agents of the bank, and they will tell their personal things, and at the same time they will tell about how much they are going to invest and what type of the interest and all these things. They will discuss with the agents, not with the frontline staff. So the banks are maintaining confidentiality, and with regard to customer deposits or the customer loans or the customer transactions, all are in the closed system only. Even though I am having an account with the bank, and even though I am having lakhs of rupees in the account, nobody knows except that agent of the bank. Today, that is not good. It should be open. Once opened, whatever the opportunities, whatever the avenues that are available in the market, that I can enjoy once it is open. As long as in a closed system, disadvantages are more. Today, the banking system is a open banking. So today, the financial customer, particularly customer data, your data is there daily through UPI or internet banking or mobile banking or physical banking. Whatever transactions are there, all transactions are stored in the RAM, random access memory. That is the servers of the bank. The server is also not in the hands of the bank. The server is a cloud service. So 1 week before only, we have faced the problem, particularly that Microsoft cloud service, they are having some problem across the globe. All people are suffered a lot. So today, the financial system, customer data accessed by either manually or particularly the physically or electronically, the third-party payment system service providers, whether it is a Google Pay or Phone Pay or UPI systems, a lot of number of service providers, they are accessing the banking data. Not only that one, the own banking ATMs, no problem, but a third-party ATMs. If at all you are having an account with X Bank, but if at all you are going to Y Bank ATM, that connectivity is there. Your data is your closing balance. Whatever the balances are there, all are accessible to the third-party banks ATMs also. Whether you call it as a white labeled ATM or brown labeled ATM or micro ATM, whatever the type of ATMs are there, the customer data is accessible through all these alternative delivery channels. Not only that one, crores of point of sale merchants are there, POS, point of sale merchants, swiping the card, whether it is a retail product or electronic product, whatever the products are there, all are having the POS machines. Your POS machine is also, the POS machine is also interacts with your data. Not only that one, third-party product service providers. Banks are now their diversification of their business. Particularly, they are selling the third-party products like insurance products, life insurance, general insurance, or in the general insurance, health insurance, or mutual funds, or demat account, whatever it is there, all people are accessing your data. That is a third party service providers. Even in State Bank of India, SBI Life is accessing, SBI General is accessing, SBI Mutual Funds is accessing, SBI credit cards are also accessing your data, whatever the account is there with the bank. Third party like credit rating agencies, whether it is a Credit Information Bureau of India Limited or other credit rating agencies, they are also accessing your data. That's why they are giving a rating also on your accounts, whether you are properly repaying the loan or not. Not only that one, customer information shared to enforcement directorates or FIU IND, Financial Intelligence Unit, Government of India. Not only that one, even income tax authorities also. So during demonetization, they accessed the bank servers. And those who are transacting the cash transactions or more, they send one Excel sheet to all the income tax payers. Please verify why you have retained that much amount and why you have converted that 2000 rupees notes. All these things, the government authorities are also accessing the bank servers. Not only that one, centralized clearing system is there. That is a check truncation system is there. So that is a centralized one. Even a State Bank of India is accessing other banks' data also under CTS system. Not only that one, today the banks are doing the activity of wealth management services. The wealth management service providers, they are also accessing your data. Otherwise, how much data, what are the type of transaction, what type of deposits is having, all the data is also accessible to the wealth management branches. State Bank of India also started wealth management exclusive branches in almost all important places across the country. So the data is now it is open, not closed. Earlier it is closed, that too, the data of the customer known to only the agent of the bank. Today, the data is open. Not only that one, on account of open the data, check culture is reduced. Today, the check culture is reduced because of the UPI payments are there. Once UPI payments are there, RTGS, real-time gross settlement system, or NEFT, the transactions are gradually reducing in the bank servers. Tomorrow, if you want to know about RTGS, it may disappear. NEFT may also disappear. Once the data integration payment systems are developed and central bank digital currency introduced, then you've forgotten about the check as well as RTGS or NEFT also. Visiting to the branches. Yesterday I have visited State Bank of India personal banking branch that is located at near Assembly of Telangana. The total square feet of the branch is 3,500 square feet. How many customers are there? Hardly 2 customers are there. Do you think that type of branch, the rental premises, the bank, if at all bank is doing, that is sheer waste. The footfalls of the customer is reducing on account of alternate delivery channels like ATM or internet banking, a bank in your home or a bank in your hand, mobile banking or call center, whatever it is there. On account of that one, the branch premises is shrinking like anything. Not only that one, reduction in cash transaction. Even yesterday, I went to the branch by Ola car. Once after getting the Ola, then I taken 500 rupees note and any changes. No sir, UPI system. That is the best system. Even I am the banker, I am not, I am using the mobile banking and all these things, but even car driver or coconut vendor also habituated. That's why it is not a difficult to reach the last mile of the financial inclusion or last person of the country to reach that particular person about the financial inclusion or banking services. It is very easy. It is a very easy and more investment opportunities. Today, most of the customers, they put their funds in savings bank, and people are also realize the savings bank is giving only 2.7 by the banks, but the inflation rate is 5.5 or 6%. So the bank is recovering interest from you, but bank is not paying interest to you if you take the real rate of interest. And increase in the customer awareness and the technology products. The technology products, even small beggars also, they are carrying the QR code, particularly at the temples. At the temples, they are putting the boats instead of the boats. Earlier, they used to put the bowl for the begging. Now they are putting the boats of QR code. So, last mile or last person reaching about the financial system is not an impossible thing in the India. Nearly 147 crores population is there. Increasing in the alternative or alternate delivery channels in the banking system. In the coming days, ATMs will disappear. Currency chest will disappear. Cash counters at the branch will disappear. Once the central bank digital currency was implemented in India in an aggressive manner. Almost all countries that CBDC is there. Out of 100 countries, 60 are roll out, remaining 40 under pilot scheme. Now, I'm talking about 2003. At that time, I worked in a State Bank of India Corporate Center in a business process reengineering project. At that time, McKinsey people, while interacting with the McKinsey, because I'm one of the project member in the State Bank of India McKinsey project, that is alternate the core banking system or alternate delivery channels, etc. At that time, they discuss about Egg Bank PLC. So no branch banking, all are through internet or mobile banking or call center or ATMs. That is the highest profitable bank at that time in the world. So that's why the first, particularly they introduced the debit card or credit card, whatever the technology. Today, I'm talking about 2003. Today, after 21 years, slowly the penetration level in India is increasing. Hence, it is called open banking. And it is a great opportunity for the startups like a fintech company in India. If you take all these examples, there is a scope, there is an opportunity for the fintech companies, particularly fintech startup companies. Lot of opportunities out there. Because of the population is the highest, biggest, the largest populated country, India. And the people are also habituated for the technology. Our exports are increasing in the world, particularly the IT sector. If you take all these strengths and the young generation people are also there in the country, if you take all these things, definitely fintech will become the number one in our country will be the number one in fintech space also. So now I will discuss about the open banking, what is the architecture, what is the benefits, why the banks are interested in open banking instead of closed banking, and how the customers are benefited on account of open banking. All these things I will discuss up to particularly the 8 o'clock. Banks have understood that the fintechs are here to stay. If at all fintech is not there, the bank market share will decrease, because the youngsters population is more in the country. One of the greatest advantage of India is young population is more. That is the strength of the country. So here to stay with us, they have to with us. Earlier, banks are view is how to compete with the fintech companies. No, we should not compete. We have to collaborate. So most of the fintech companies and banks, they collaborate and it is a joint venture. Now the banks are under joint venture. Bank plus IT companies like fintech companies, they are running the bank, not a single alone. Take for example, DBS Bank, credible fintech company, collaborated. Kotak Mahindra, the Pine Labs, that fintech company. Federal Bank, Credit Avenue, that fintech company collaboration. HDFC, they are collaborated with the Paytm fintech, and ICICI Neo, or Axis Bank, Bharat Pay, or IDBI Bank, UGRO Capital, or SME Bank of Bank India, that is a foreign bank, DRIP Capital. I am giving only few examples. If you take almost all banks, they are tied up with the fintech. That's why one good thing, the initiatives also rise to the occasion, and they are going to introduce the advanced certificate course in fintech shortly. Rise to the occasion. What are the market avenues are there? Market opportunities are there. Market demands are there. Accordingly, I have to fine tune the curriculum also, fine tune the courses also. Otherwise, I may not be in the market. I may not be in the market. Tell me. Later on I will call, sir. I am in meeting, sir. So this DBS Bank and all these things, they are collaborated with all these things. Hence, the banks of the future will be the software companies. So the banks of the future will be the software companies. So here, what is the open bank? Open banking is changing the financial service sector. Completely revamped, rechanged that financial sector. The paving of the innovations. What are the innovations? If you use the technology, then lot of miracles, a lot of cost reduction, a lot of functionalities, a lot of facilities that can be provided by the banking sector to their customers. So redefining how business and financial institutions are interact. So paving the innovations. Innovations are a need of our. If no innovations, the banks, traditional banks will die. That product life cycle, if you see the product life cycle, in the product life cycle also starting, growth, saturation. Once saturation, if you introduce the innovations or product, the development or whatever the USP, then only you will continue in the market. Otherwise, fallen and death. Fallen and death. And the shift towards a open structure has created in the open banking system. Open infrastructure is created. Opportunities for accelerated modernization of a service diversity. Banking is a service sector. They have to provide the service, best service, if possible, international standards or whatever the functionalities that are available across the globe. You have to provide to them. Then people will enjoy. They will become the brand ambassador for the banking sector. I need not engage the Amitabh Bachchan or I need not engage the brand ambassadors of Hema Malini. If at all I provided the best service, modern, latest technology services, the bank customers are with me only. They don't move. They want to live from my bank premises. Regulatory trend or driving adapters. Today, even Reserve Bank of India also, they have created a fintech department. Why? That is the order of the day. If at all Reserve Bank of India good olden days, whatever the regulations are there, that is nowadays stale. The regulator also move with the market. They have to move with the market. The market trends. What is the public demands? Accordingly, the banks are to be provided. Regulators also changed and the regulations are also suitably changed to safeguard, to mitigate the risk in the process. A 2023 report of Juniper Research predicting open banking payment transaction value will exceed $33 billion globally by 2027. That much potentiality, that much demand is there for the open banking system. Data plays an important role in the open banking, undoubtedly. That's why data warehousing or data mining is also very, very important for the business organization to retain the customer, to invite the customers. With the access of a detailed financial data, companies can make more informed strategic decisions, from risk mitigation to investment planning. However, about more than the data access, some important items are also there. Data access is one important area. Other than that, what are the areas? Speed is required. Earlier,
IB to Indakshi.
Sir, shall I stop?
Unito?
উনি জয়েন করে গেছেন।
না না, উনি জয়েন করেছে কিনা অ্যাজ এ পার্টিসিপেন্ট? আরে উনি এটা বুঝতে পারছো না, তুমি প্রেজেন্টার হিসেবে জয়েন করেনি।
তাহলে ওদের লিংক যেটা দিয়েছে তাহলে ওকে তার
ভুল দিয়েছে,
ভুল লিংক দিয়েছে। তাহলে
তা সেই জন্য বলছি এখান থেকে তুমি যদি জয়েন করার ইয়েটা দাও সেটা বলো।
এখান থেকে রিকোয়েস্ট পাঠাচ্ছি।
হ্যাঁ রিকোয়েস্ট পাঠাও, বলো বলো
আমরা ফোন
ফোন করি। सर वो पार्टिसिपेंट का लिंक में गया एक्चुअली, यही तो प्रॉब्लम हो गया ना।
Okay, sir. So, beyond access to the data of the bank, customers always speed, adaptability, comprehensive set of offerings are equally important. Access of the data is one important. Okay, speed. Today, to withdraw the amount, earlier system, to withdraw the amount, I have to wait up to next day 10 o'clock. Then I have to wait, I have to go to the branch and I have to form in queue, then only I will withdraw. Today, that is not the case. Even at night at 2 o'clock also, I can transfer the funds. The speed, adaptability, comprehensive offering, all are equally important. The financial service markets transitioning from sealed operations, alone, closed and interconnected environment. Earlier, in a closed environment, in 4 walls only. Now, the 4 walls are removed. And the financial institutions and the tech companies work together to offer the broad service. To broad service, only one minute, sir. Sorry for the inconvenience, sir. So today, the financial institutions and tech companies are working together to offer the broad services to the bank customers. Bank alone is not provided that technology services. Even technology services, they may not have the banking domain expertise. If both are clubbed, both are joint, the convergence benefits are also there. But open banking, not without challenges. Open banking also, they are having the knowledge.
Please,
Particularly,
he has joined, sir. He has joined.
Sorry, I come, sir.
Yeah.
Okay. 1 minute, sir. I will close this one. Sir.
Dr. Prasad, as I told you, certain technical glitches were there for which our guest of honor couldn't join. Now he has come. So I request our to please say a few words of wisdom to our participants. Sir, actually, I request our Indakshi Bhattacharya to please introduce sir to all the participants.
Good evening, sir. Am I audible? Hello.
Yes, sir, you're audible. So we welcome our guest of honor, Sri Rishikesh Mishra, sir. He is the General Manager, Risk Management, Union Bank of India. We are really honored to have you with us today, sir. So I would request now Sri Rishikesh Mishra, sir, to say a few words.
Thank you very much. Thank you, sir, for inviting me. It's a great pleasure for me. I'm delighted to welcome all the participants here in the pivotal and this very, very crucial and important webinar on open banking. Just a minute, please.
Indaki, make me live. Indaki, make me live first. It is a delight to have Mr. Rishikesh Mishra with us. Mr. Mishra, sir, we have with us our Vice President, CMA TCS Prasad. He is also with us. He has joined today, and we have with us our.
Chitto,
Yeah.
I think he may not be listening. He's on a phone.
No, I am telling you.
Yeah.
Yes, he is. Mr. Mishra, let me introduce our Vice President, CMA TCS Prasad is with us. He is with us. He is a IT person for a profession itself. He was the
Namaste, Mishra ji. Namaste.
He was the
Namaste, sir.
former,
Namaste.
he was the former executive director Cell and our chief speaker and architect of the whole banking month. That is CMA Dr. P. Srinivas Prasad sir, who is actually delving on the various facets of the digital banking. Today is the in this July month, banking month, we are having the this concluding for the July month. A concluding session is there. Sir, over to you for your words of wisdom. Thank you.
Thank you so much, sir. I'll not take much time because our expert and today's Siva Rama Prasad sir is discussing about this. So I'm really thankful to you for inviting me. It is an honor to address such a distinguished gathering of professionals and thought leaders who are shaping the future of our financial ecosystem. Actually, today a lot of transformation is happening in the banking industry. And we can say that this in the webinar is very apt, and we'd like to compliment the ICMA, the Institute of Cost Accountants of India, and for organizing this webinar on open banking with all the professionals. It is really great, sir. A great initiative by you. And you see, even the transformation, when the name is open banking, I think everything will be discussed by our today's expert in this webinar. So no need to mention the importance of banking. The core is accepting the deposits of money from the public for the purpose. The purpose is lending or investment, which is repayable on demand. I consider banking industry, which is pivotal in any of the economy. Any development will take place only through the banking industry. Actually, through bank, we are delivering prosperity and happiness in the society. If you talk about any development, anything happens through the banking channel only. But now bank has opened itself. So whether the bank is fintech or fintech is a bank, it is very difficult to distinguish between the banks and the fintech now. So technology is playing a very pivotal role in delivering the banking services. So today we stand at the forefront of a transformative era in the banking industry. Open banking driven by technology advancement And the regulatory framework is revolutionizing the way financial services are delivered and consumed by the customer. So lot many developments are taking place, lot many complexities are there. We are living in the VUCA world, volatility, uncertainty, complexity, and ambiguity. So how to counter that? We should have the vision, how to go ahead. Now nobody is having any patience. You need to deliver it in time and on time, anywhere and anytime. So that is the mantra, and the customers are looking at it, how much comfort we are giving. More than that, how we can give to them. So this is the way we are delivering an entire, because this is the month of banking month, as already told by you, and banks were nationalized. First set of banks were nationalized in the year 1969, 19th July. So so the importance of bank always will remain. Bill Gates also said banking is necessary, but banks will not. Banking is required, but banks will not. So physical and virtual, digital is the era, and in this era we need to protect the interest of the bank, because banking is a business of trust, business of risk. So how much risk we are going to take? A risk on behalf of the customer. To protect the interest of all the stakeholders, it is required to take all those steps to secure, to safeguard the interest of the depositors. And that's why so many regulators and RBIs, there's a very resilient system is there in our country. We have seen so many ups and downs across the world. Many things happened, Russia-Ukraine war and many other Federal Reserve interest and all those many events which is having direct impact on each one of us. But if you make the banking industry resilient by taking so many steps, we are really very fortunate having very strong regulator in the form of Reserve Bank of India, taking so many initiatives. And the see, whenever you take, there is a risk involved in each and every activity. So the foremost thing is to see that the security of customer data is paramount. When we say for the open banking, the customer data is also being shared with so many other players who are involved. With open banking, sensitive financial information is being shared more widely than ever before. So it is imperative that we implement robust security measures to protect this data from breaches and unauthorized access. See the mantra, there are three principles of cyber security: confidentiality, integrity, and availability. So if I access my own data, it should be available, it should be confidential, and secrecy is the mantra. The first and foremost duty of a banker is duty to maintain secrecy. What kind of secrecy is there about the customer? How we are going to create trust among the customer? That is important. I think I will not take much time. Many things we see that many frauds are keep happening in many. See, so many banks, small frauds, and fraudsters are moving around to snatch the money from. So now different kinds of practices have started happening in the economy because of the unemployment and other issues also, literacy. So now we need to make each and every person risk literate. Earlier we were thinking that information literate. Now the time has come to make everyone risk literate. So how much risk is involved? How we are going to mitigate all those risks? That point is also there. Now Reserve Bank is also talking about the assurance function. The importance of assurance function, control function in the financial system is many more. So audit, risk and compliance. How we are compliant with all the rules and regulations of the regulators, because it is going to safeguard each and every stakeholder, each and every person who are involved in the banking channel. So I being this, many things are keep coming. So we need to focus on managing risk associated with the third parties, third party business providers, service providers. So many fintech companies are working with the bank. In our bank itself, I see more than 150, and beyond that, the partners are working for the digital banking, other aspect. And now virtual banking is happening. Universe is there to access the products and services of the bank very easy way, because nobody is having time. So 5 minutes, 10 minutes learning bites are also being provided to make aware our customers. They should be aware about all those things. Then only they will have confidence in the banking industry. See, I remember that when the fraud happened in Punjab National Bank sometimes back, people who are talking about the banking industry, not about the bank. It is not the PNB. It is about the bank. So in bank, these things happen like that. So that's why we are concerned, and every bank is having their literacy awareness program, financial literacy awareness program. So we need to be always aware about this. So the concern is how to prevent the fraud which are happening. Our third party providers, they will enter into the premises, like suppose any third party like life insurance and mutual fund. Many third parties are working with the bank, associated with the, along with the core banking. So third party products also banks are providing to the customer. So everything is having direct impact on the customer, whatever is happening in the economy. So in this VUCA world, everyone should have, so we can counter the VUCA with VUCA. So we see for the volatility, we should have vision. For uncertainty, we should have. So we can counter all this with our knowledge level. We should be agile enough to change ourselves, to adapt ourselves in the new situation, new era, and keep our knowledge level high. So it is said that nahi gyanin sadrisam pavitra mahi vidyate. So nothing is as sacred as knowledge. And our tagline is also there in our learning and development division. When I was there, the tagline adopted by the bank is Chansa Kansa Chaiva Vidya Amartang Chasade. Chansa Kansa Chaiva Vidya Amartang Chasade. Chante Age Kuto Vidya, Kante Age Kuto Dhanam. So everyone is working for the money, and time is money, money is time. What is time? Things I must earn. But otherwise, time is time. So we should value the time. So value of any of the person, any of the thing depends on only two factors, time and location, because there is no difference between you and me and anybody else for that matter. Everyone's goal is only one, that is happiness. So we are delivering happiness and prosperity in the society, but my boss goals is also happiness. My customer's goal is happiness. My family members' goal is happiness. My parents' goal is happiness. Everyone's goal is happiness. There's no difference between you and me. When we say that we breathe same air, we drink same water, we eat same food, whatever available on this earth, we have same emotion, we have the color of the blood is same. My goal is also same, your goal is also same. What is difference? What is the difference between you and me? Difference is only in two counts. One is time and another is location. Your location is different, my location is different, my time is different, your time is different. It is your time, it is my time. It's only because of the time and location, nothing else. But in this time, how we have to manage? That's why I said time is time. We are not able to manage the time. What will happen? It will bring tears in my eyes. T-I-M-E. Here the time is things I must earn. Otherwise, time is time. It will bring tears in my eyes. So time is limited for every one of us on this planet Earth, and there's many things happen, keep started happening in the form of climate change, climate risk. See, many emissions are keep happening, so it is going to impact each and every one of us. Climate risk is another factor, but the open banking, how banks are doing banking, now we have to consider so many factors, climate factors, ESG factors. Okay, so environment, social and governance, then only we can survive. So ESG rating has started, environmental social due diligence has started. So many things will happen, and we have to learn from the past. And then if it is not happening, if you are not learning, if you are not adapting, this earth will not be a livable planet, because only earth is the livable planet where many organisms, plants and everything is there, but no other planet is having such kind of environment and such kind of condition ki any living being will be there. And that too in the human being, we need to consider, and it is the quality of the human being. We have the organizing capacity. That's why organization is different and organization is doing. So I will not take much time, sir. because my team is still working and many things we have to finish today because another meeting is also scheduled on Monday. For that, our preparations are going on. Big meeting is there with the top management. So I think I just listened few lines from today's speaker, and today all of you are fortunate to have the great speaker today on this subject, open banking. The awareness which we make to each individual in this. So that's why I said the goal is happiness. What is the root of happiness actually? The root of happiness is knowledge. It is said that Vidya dadat binyam binya dhyati patratam patratva dhanmapnoti dhanat dharmat tata sukham. So ultimately we are working for the happiness. The root is knowledge. Anyhow, we have to acquire the knowledge, and knowledge is a capital. All of you know, as a financial experts and professions, knowledge is a capital, and capital is a liability. Capital is a liability. So why it is a liability? Why capital is a liability? My own earned money is a liability. So when we have the balance sheet, capital is classified as a liability. Why it is a liability actually? Because we are earning it, we have earned anything, any capital is there with me, it is because of the society. We have earned it from the society, whether it is salary, whether it is any profit, we have earned it from the society. That's why capital is classified under liability, and liability we need to pay it back. So likewise, knowledge is a capital, information is a capital. If you have some information, it is because of somebody else. Somebody has given me the knowledge. Some guru is there, my parents, my colleagues, my relations, my friends, my seniors in my organization. They are giving me the knowledge, information, how to utilize that. So leveraging on the capital, because sometimes back we were on a very banks were having the big challenge in the form of capital was not there. And nowadays we see that average capital of any of the bank is more than 16%, 17%, 18, 19% for the public sector bank even. My bank is having more than 17% of the capital. We never thought about it. Because earlier days, the days where there were very challenging days were there. Banks were struggling. Now, how much capital, I think all the those who have joined, how much capital you have in the form of knowledge, in the form of information, so that you can leverage on the capital. You can leverage on the knowledge. That is more important. Today you are fortunate having joined the here. So any question, anything is there from your side about Union Bank of India or bank, you are most welcome. Thank you very much, sir, for giving me the time and opportunity to address such a august gathering today.
Thank you, sir. Thank you. You have really in a certain technical glitches, and most important thing is that Dr. Prasad was very eager to meet you also, to listen you, because Dr. Prasad is you. I just want to take your 1 minute time, please. You see, the Institute of Cost Accounts of India, ICMI, has come out with a book on net zero emission audit for financing by the banks. I will send you a copy of the book and you'll be very happy. We have got 4 taxonomy already on the environment risk, climate risk, many other, whatever sustainability risks are there, which are faced by the banks also during their, evaluation of any project. And during the post lending and pre-lending, we have covered many things in this book. And you'll be very happy that we are continuously we are having our many publications. You'll be very happy since you are talking about the risk management. You are the head of risk management. I'm telling you, we have come out with a book which is the first of its kind in the industry. That is aid memo on infrastructure financing, which involves which encompasses various areas, including ESG risk on the infrastructure. So we have come out with these books. Our professionals are geared and they are ready to accept the challenges. My request to you to only, sir, I will be meeting you in person in your bank, and I request you to please involve our CMA professionals. As you understand, we are very much engrossed and we are very much passionate to serve the banking industry, because we understand from BFSI board, BFSI is a sector through which the country is doing a lot of things, and our Prime Minister's goal, country's goal for Vikashit Bharat, and everything can be possible. Nation can grow only if we can contribute to the BFSI sector. With this, sir, I am really grateful to you. We shall be having our meeting later on with you physically. I will go to your bank
Definitely.
and I will take your permission. Thank you, sir.
Thank you so much, sir. Really great job. I think if any contribution is towards the environment or towards the climate change, will be great help and as a for the human being.
Yeah.
As because I've just gone through many of the literature, many of the articles and books. The entire environment change is bound to happen, and there is surplus of emission is happening everywhere. We cannot stop it because we are energy dependent. So electricity, one of the major, and plant, see, cement and steel industry. So we are dependent on energy. 24 hours we require some amount of energy, electricity and all. So electricity, we cannot completely dependent on renewables because they are intermittent in supply, intermittent in nature. Because 24 hours we will not get the sunlight. For storing this sunlight, we need heavy investment and expenditure will be more. Again, wind also will not get always. So they are intermittent in nature. We need to be dependent on electricity. So we have to have some fossil fuel kind of energy also. So really, sir, great. And I'll be looking forward to meet you physically and see your books also in this.
Thank you. We shall be giving, sir. Thank you.
Right.
Thank you, sir.
So thank you so much, sir. And
Thank you.
my best wishes to each one of you. Thank you so much
Thank
for
you.
giving me the opportunity.
Thank you.
Right. Thank you. I'll leave, sir, because my
Yeah,
team
yeah,
is
please,
waiting
please,
and many
Please.
activities are there in line. Right. Thank you, sir.
Thank you so much, sir. So
Over
I
to
will
Dr.
not-
Prasad.
Yes.
Over to Dr. Prasad, please. Dr. Prasad, please.
Sure.
Please unmute, sir. Please unmute. Dr. Prasad, please unmute. Dr. Prasad, please unmute.
Now it is okay, na, sir?
Yes.
Yes.
Now coming to open banking, it is a financial service model. Business models in the banking system are n number of a business model is there. Why we are developing business model? To capture the customers, to increase the market share, to increase the penetration of the banking products, whether it is a deposit or loan or cross-selling. Actually, this model is involvement of third-party developers to access the financial data. Here, large data is available with the bank. The customer transactions, whether it is a deposits or advances or particularly the remittances, whatever the type of transactions that are happening in the bank, that total data is available with the server. That data I am going to share to the others for the benefit of the customer and for the benefit of the bank through application program interface. So once directly I am sharing the data, then it is a high risk because the customer name, the number, the email address, the contact address, all are available and how much total deposits and advances of the each and every customer, that is a sensitive data. So through application program interface, whatever the relevant data, whatever the required data to the third party service provided, to that extent only will provide, not beyond that. This model completely changed the way of the financial data is shared and access. Once I am sharing, suppose you take for example, I am not sharing the data. How you will get the payment of the debit card to POS machines? That is not possible. If at all I am not sharing the data through the third party ATMs like other banks, how you will get the money? If at all I am not sharing the data particularly to the other service providers, then it is an inconvenience. Particularly take for example, my data, the particular customer data is accessible to the IRCTC. If at all I am not sharing up to certain amount, certain balance amount, then automatically how you will get the tickets? whether it is a airline or IRCTC, whatever it is there. Because I have to share the data, then only you will get the benefit. Suppose Amazon you are going to purchase and you are going to pay through the bank account, that is net banking. Then if at all I am not sharing, how you will get that particular products? So whether it is a retail products or travel or whatnot, all. This model completely changed the way of the financial data. Is shared and accessed by the others. Open bank can give the consumers more control over the financial information. Earlier, in the manual system, to know my balance, I have to visit to the branch. Today, that is not required. Through mobile banking or through SMS or through email or whenever I am withdraw some amount in the ATM, instantly my balance will also available. And how much balance is there, how much leftover amount is there, how much I have to consume, all the decisions are to be taken care of by the customers, providing new service applications. Whatever the new service applications, whether purchased through Amazon or IRCTC or airline, whatever the services are there, applications are there, all are the sharing of information of the bank data is required. Otherwise, if at all bank data I don't want to share to anybody, means customer is unhappy. Because today what is happening is almost all banks they are shared the data, thereby the customers are fulfill their needs, day-to-day needs. Non-financial companies, this shift means are able to offer customized financial service to their customers and make more data-driven decisions, innovative payments and account management. All these things are happening on account of sharing only. Had I not been shared the data, then automatically it is a drawback or it is a problem to the customer. So the customer to be satisfied. Once the customer is satisfied, he will become the brand ambassador of the bank. So customer should be delighted, or sometimes the customer should be surprised on account of services provided by the whatever the latest technologies. Yesterday, while I'm traveled by Uber. Immediately, in the mobile app only, Uber app only, whether the driver is on the AC or not, immediately message came. You put if at all on, yes, otherwise no. If at all I put no, then automatically that amount will be deducted from the driver's payment. And if at all I put AC, whatever the earlier fare is there, that will be recovered from me. So that is an innovative feature, because here I need not call the driver. Earlier, what the apps told, no, have you liked the service means to why you have not liked the service. So many other responses will come. Today that is not the case. If at all driver is not they put on the AC, then automatically if I put no, then my fare will be reduced. That is a Rapido. That particular service provider also, they have introduced all these functionalities. So I like it very much. Otherwise, after that, I have to give the low rating. After that, why you have given low rating? All these things, sequences will come. Instead of that, if they asked initially, now the journey started, whether the driver is on the AC or not. If not, the fare will be reduced. With better access to the financial data, business can simplify the payment process. Earlier, I had to carry the cash, I had to go to the bank, and I have to deposit in the bank. Today, that is not the case. Even night 8 o'clock also, I can pay the amount. Today, on account of payment systems only, the liquidity problem of the business people, particularly those who are current accounts or working capital loans, they are happy with the banking services. generate new revenue streams. Today, I am providing ATM, and after 5 hits, automatically 30 rupees or 40 rupees, depending upon the bank, they will deduct. It is an additional revenue to the bank. One side it is a additional revenue. Second side, it is a customer convenience also. Both are in win-win situation. Both are in win-win situation. Once I share the data, once I open my data to the other service providers. How does open banking work? Here, the open banking enables interoperable financial services through the use of APIs, application program interface. So with that only, the APIs only, up to what data, what field in the customer data I have to share to the third party, the APIs are available. These APIs facilitate the secure exchange financial information. Secured information. Suppose I have to share only the balance. That balance also only view rights, not only read, not write functionality. Between the banks and authorized third parties, unlike traditional banking services, which often operate within the closed environment, and open banking decentralize the financial services. Centralization always a danger. And you have to give the power. You have to open your system. Then only it interacts with the market, and whatever the benefits are there in the market, we can enjoy and the customer can also enjoy. That is the beauty of the open banking system. In traditional banking, data is siloed, operate independently, avoid sharing information. Now, even earlier, if at all you are asking banker, sir, particularly my balance means have you brought your passbook, and what is your account number, and if you brought only the passbook, then only they will allow, otherwise they don't inform the balance also. And the third party is no question. No question of information revealed to the third party about the customer's information. With individual institutions challenging outside application to interact directly with the financial accounts. Your data is accessible by the third party people. Whether it is IRCTC or airlines or Amazon, whoever is there, the payment systems, they are accessing your data. And open bank disrupts the mandated standardized data formats and secure communication protocols. So the communication protocols are also to be matched. This creates a level of a playing field in the third party service providers. Can integrate with multiple banks under the common set of rules, regulations, and technical standards. In the open banking system, standardization is required. Protocols are same. If at all are same, then only this functionality will work. Otherwise, it will not work. Different configuration, different protocols. Service provider is one protocol. My bank protocol is different. It will not match. And the service provider may not interact with my server, particularly with the help of API. So all the rules, regulation, technical standards also, that is also to be matched. Once the matching is there, standards are established, then only they can access my customer data for limited purpose, not for broad purpose. APIs, application interface, program interface in open banking are typically characterized three main types. APIs are three types, mainly categorized as three types. What are the three types? One is data APIs. These provide read only. You can read, and you are not capable of changing the data. Only view. These providers read only to access the account information, balance and transaction history. That's all, nothing else. No debit, no credit in your account. So the data APIs, these provide read-only access. And the second API model is transaction data. The service provider do some transaction, particularly only the debits. Only the debits. The POS machine is a transaction API. So these APIs are allowing a transfer of funds, setting a direct debits and initiating payments. POS machines or ATM machines, other bank ATM machines, not my bank ATM. My bank ATM means the data is with my bank only. But whenever I am accessing the other bank, then the transaction APIs are required. And product APIs. These enable third parties list of financial products, rate of and terms. They are often used in comparison websites or marketplace. Particularly the data, particularly the product differentiation is there. Union Bank of India rate of interest is one thing, State Bank of India rate of interest is one thing, and they will compare. If at all you are putting your deposit, particularly in fixed deposit, you are getting 10% only. This if you put in Union Bank of India, it is a 10.5. Like that, the product APIs are there. So it depends upon the service provider and the bank and service provider for what purpose they are integrating. For that purpose, they will suitably given the different APIs, whether it is a product API or a transaction API or data API. Now coming to in breaking down the data barriers and enabling interoperability between the platforms, Open Bank can accelerate innovation in the financial services. Lot of innovations are happening. And the industry by providing business at granular data insights. One example I am quoting here. Earlier, take for example, credit cards are there. Credit cards data is located in the servers of the credit card companies. Suppose I'm usually pay the I'm normally used the credit card for purchasing jewelry. Immediately, if any new jewelry company are going to introduce the particular jewelry product, then they will interact with the credit card department and who are jewelry frequently purchasing that data they can access and they can sell the products to them. So that's why the data warehousing is storage of data. Data mining is the very important. Once data mining is there, lot of the customer taste, the customer preference, the customer size of the transaction and what is the average balance, all these things are useful for giving suitable or for selling suitable products to the customers. Open banking can accelerate innovative in the financial services industry by providing business at granular data insights or expanding the range of the financial options. Examples of open banking services. What are the examples of open banking services? Open banking is not one discrete product, not only, it is a multiple products. Just the Union Bank of India sir, General Manager Mishra sir also told they have taken the services of nearly 100 or more than 100 the fintech companies are associated with the Union Bank for various products, various services. That's why a lot of demand in the coming days for fintech companies are there. Startup companies are there. Startup fintech companies, they have to interact with the bankers. Otherwise, bank alone, they may not provide this type of service to their customers. Rather than it a framework which number of financial services can be enabled. This actively evolved the scope of financial services coming to market is likely to be expanded. So not only restricted that the savings bank is only withdrawal and deposit. So many byproducts are available with the help of a savings bank. Which the open banking is currently used. What are the ways? Why they are in which ways the open banking is currently used by the banking system? If you see compare the world in other countries, the open banking, they are providing a number of facilities, number of functionalities, number of products they are selling. So the ways in which open banking is currently used in India, what are the, because it is evolving stage and slowly it will expand also. In future, you will get a number of financial products and a number of services available with the open banking system. Particularly payment initiation service that is already there in the country with the help of your debit card and with the help of your mobile or UPI, you are paying the amount. But whenever you are paying the amount, your bank account is accessed. Your bank account is accessed by the service provider. So that's why it is called open banking. Retailers can initiate payment directly from the customer bank account, bypassing the need of a traditional bank. Earlier, whenever I am paying the amount, I use it to give the cash, or I have used it to give the check, etc. Or next day, whenever I cash withdrawn, then only. Today that is not the case. I can swipe immediately. Once I swiping the card, my account of the bank is accessed and the balance is cross-checked. If sufficient balance is there, automatically the transaction is materialized. This method could lead to faster settlement and reduce the transaction fees. Earlier, to complete the transaction, it is very difficult. Every time I have to visit to the bank, I have to stand in the queue and prepare the check and give it to the counter. Counter clerk will verify my signature. And signature verified, after signature verified, the counter clerk will send to the accountant for passing of the check. Next, from passing of the check to cash counter. All these sub process today it is not there. Simply swiping the card, give your PIN number, personal identification number or index number, then your transaction will be covered. Account aggregation. The financial advisor or wealth management. If at all you are going to a wealth management and the wealth management service provider also with the banks, if they are providing this type of the open banking system is there, they can access all the data. So total amount of deposits are this much, total loans are this much, and out of this surplus, if you invest this one, particularly mutual funds or NSS, National Savings, or in capital market, or invest in mutual funds like that, once the account aggregation is there and your transaction pattern is there, then the financial advisor or will the wealth management firm can pull the data for multiple accounts, giving more comprehensive view of the client's financial status. This enables a more accurate and personalized advice. If at all you are giving only limited information, only one account or one bank account, today that is particularly at the start of the particular class I told about State Bank of India. They are giving a loan within 10 seconds or 10 minutes like that, by downloading the GST returns. At the same time, once I have given that particular firm's PAN number, or if the PAN number, then automatically it will check the CIBIL report. It will check the CIBIL report, whatever the bank accounts are there, and what is the status, all these things, the software will give a decision to go to move or not to move, or to give or not to give the loan, like that. Automated budgeting. Business can offer their employees a smart expenses management system that automatically categorizes and tracks spending from multiple bank accounts, simply financial reporting and oversight also. Even the open banking is not only for service providers, even for organizations also. If at all he is a debt trap employee, then the organization should be more cautious. Today, while recruiting the people by the banks or some organizations, they are verifying the CIBIL report of the prospective employee who is going to join in the organization. Even SBI General, where I worked as a vice president. So at the time of after interview and all these things are over, then we will verify the CIBIL report. If at all CIBIL report is bad, we are not giving any offer letter to him. Why? Because he is in debt trap. He is defaulted with banks. If that person is continued in the organization, some wrong signals will come. And instant loan and a credit scoring. This is already implemented. So it your history data last 2 years, particularly savings bank data, it will run. And what is the average balance monthly? Sometimes the balance may be there, balance may be less. And less the system, the particular software will verify the CIBIL rating. And particularly the loans, whether they are paying the regularly or not. If all these things are verified, instantly the system will give the one matrix, and in the matrix all elements are filled, and whether he is eligible for 10 lakhs or 5 lakhs or 15 lakhs or 20 lakhs loan, and automatically the link will be created. If the customer is accepted the loan, automatically system will create the loan and the amount will be credited to his savings bank account. Instant loan and credit scoring is also possible. Even particularly in airline, whenever you are going to airports, in the airports also, the credit card marketing, the people will also be there. Sir, do you require the Citibank card, that bank card, this bank card? So once you told about your PAN number, then with the help of PAN number, they will access the central server, and you are eligible, sir, you are eligible to take the credit card for worth of 5 lakhs or 10 lakhs or gold card or the platinum, whatever the type of cards are there. Why? Because all the data is shared to the limited purpose to the service providers to sell their products. Once they sold the products, automatically bank will get commission. The customer will also be satisfied. Automated invoice reconciliation. Once your data is there, then only the transaction will be completed. Otherwise, inadequate balance will come. Whether it is an Amazon or IRCT or airlines, business can open the banking APIs to automatic process of matching invoice the transaction, reducing the administrative work and improving the accuracy. Once the transaction is completed and the amount is credited to the seller's account, then immediately the airline's ticket will also come, invoice will also come with the GST, whatever it is there. So that type of functionality earlier, to purchase the ticket, I have to first withdraw the cash, go to the airline's office and stand in the queue, fill up the application. And today that is not the case. Your data is shared to the airlines, your data is shared to the IRCTC, your data is shared to the merchants also. through point of sale mission. All these things are happening instantly, and your invoices are also generated instantly. Multi-banking platforms. A corporation operating multi-bankable the markets could consolidate its account from different banks into single database, make it easier monitor the global operations. So today, once it is very easy to get the information of other banks also. Integration is shortly will happen. Once integration is happening, total exposure of your liabilities, total exposure of your assets, all are reflected in that particular screen. Then automatically the business organizations also, whether we can lend or we can give the credit or not, that is also they will take into they take a decision. Personalized marketing. Retailers can analyze the transaction data, provided targeted promotions and loyalty rewards. Loyalty rewards. If at all I am purchasing only Amazon in their database, then automatically they can send the gifts also. Or if at all I am using debit cards, SBI reward points are there. So based on the product purchase, the product suppliers also giving some reward points. That is also possible once this data is shared to the service providers. Personalized marketing. Retailers can analyze the transaction data to provide targeted promotions or loyalty rewards. They are directly relevant to the individual's spending habits. Account aggregation. Financial advisors and wealth management firms pull the data from the multiple accounts, giving the more comprehensive view of the client's personal financial data, financial status. This enables more accurate and personal advices. Real-time fraud detection, that is also possible. By analyzing the transaction instantly, the business can detect the unusual activity quicker and before the reduce. If at all I am using the debit card and giving the wrong PIN number 3, then the card will be blocked. Because the system will grab unauthorized person is accessing the third party, the other person's data. Even even internet banking also, if at all I am giving 3 times, block. ATMs, block. Point of sale mission, block. So the fraud detections are also inbuilt in the API system. The survey, even that type of API systems are there. These are the examples just to start what it is possible. They offer a glimpse how the open banking can change the financial sector. Actually, if you see the developed countries, lot of facilities, a lot of services the service providers are offering by using the customer data from the bank through open banking architecture. Once you go through that different countries, different banks, what type of service they are offering, it is very interesting. So that's why the fintech companies, startup companies also, they are studying that one and they are floating the company. Today, starting a company is not a capital expenditure is not required because the cloud services are there. You need not purchase the computers, hardware, software, firmware, humanware. No need. All are provided by the meter reading. Like electricity, we are using the electricity and month end we are paying the amount. Like that, even IT services also like that. So that's why startup companies, the capex is very, very less. The key requirements. If your key requirement, first API specification is required. What type of API? Only view or only transaction or only product difference, all that API. Second one is operational requirement. What type of operations they are going to do? And the customer experience. Some of the customers, what type of experience? Suppose if at all the banks are sharing the data and their balances are going out. And some people, fraudsters, or particularly the cyber frauds are happening. The customer experience is also required whenever I am sharing the data, because based on the experience of the earlier customers, then whether I will give it to that API facility to the service provider or not. And reporting. What type of reporting they are sharing to me? Okay, I'm providing that data. And what reports the service provider, and the service provider what the data is sharing to me, all these things that is required. Fraud detection. Once I am giving some the data sharing, whether it is fraud prone or fraud will not happen, then I have to decide. And the business insights. Why should I share the data? For what purpose? Whether I am getting commission from them, or any new products they are purchasing to me. So even 100, what Mr. Sir has told that fintech companies are providing services to the Union Bank of India means for what purpose? Why should I share? Once I am sharing the data, my customers' data, what benefit the bank is getting? And user storage integration. So once I'm sharing the data, my data should not be looked at, they pass on into the service provider server. Only my data to be viewed or transacted, that's all. Suppose my data is populated in the service provider, then later on he will misuse that one also. And banking system integration. Whether integration is possible, whether my server and service provider server integration is possible or not, whether the particular protocols or rules of the business all are synchronized, bandwidth all are good or not, that is to be third party onboarding, and at what times is boarding, and I have to verify. Because once the third party is accessing my server, my customers' data, I have to verify who is accessing, for what purpose, and customer consent management is also required. Simply, I'm not giving the data because the customer consent with the help of a PIN, and a strong customer authentication is also required, and API secured or not. Today, the blockchain technology is there. If at all this is a weak system API, then automatically the service provider, he will grab the data, he will do whatever nonsense is there. All these things are key requirements in the particular open banking architecture. This is the architecture, the customer, particularly the open banking platform, that is a bank. They are providing to the third parties like merchants, etc., or other banks, and the internal bank network is there, and the core banking, credit management, card management, or utility services are more. That is, I am giving access. So this is the architecture of the open banking system. Who uses open banking? Okay, who are using the open banking? What type of service providers, what type of fintech companies they require to use the open banking system? Open banking completely restructure how the business customer access use the financial data. With the open banking framework, there is no financial service that cater the nearly every customer B2B segment only, business to business segment only. And here, first, individual customers. The people use open banking access a wide range of financial through the third party applications. First, individual customers, they are the main user. For that purpose only, I am sharing my customer data to the third party service providers. They can review their spending pattern, get a highly personalized financial advice, or automated transaction such as bill payments, etc. For that purpose only, I am providing my customer data to the service providers. My main objective is to satisfy my customer, that is the individual customer. Financial institutions, because bank to bank. Suppose I am not they giving permission to other banks, particularly to withdraw the cash from other bank ATMs. What will happen? Then I have to install more ATMs to my bank. So once other bank ATMs are there, then I need not incur any capital expenditure in this regard. So other financial institutions, otherwise again RTGS transactions will increase, or NEFT transactions will increase, or check culture is increased. To reduce the load of these particular products, I have to give the access to the other banks also. So other banks ATMs also, my bank ATMs, the customers can withdraw the amount. So once I am withdrawing the amount from other bank ATM, that other bank is accessing my bank servers. Traditional bankers, credit union and financial services are open banking to modernize their offering, create a better customer experience. They can also collaborate with the smaller technology companies to bring innovative and service to the market. Third one is fintech companies, the financial technology companies. They are asking about my data for payment systems. Now, newer technology companies use a secure data share features open banking to create a specialized service. These range from budgeting apps to the complex financial management solution for businesses. So that's why today for doctors, if you see that the doctors, in the doctors, the medical representatives are coming more often to meet the doctor, to sell their products, to show their products, to market their products. Today in the banking department also, IT department heads, daily fintech companies are coming. And sir, this application for this purpose, once this application is integrated with your server, with your customer data, this you are getting, this I am getting, this the customer is benefiting. So once I'm sitting in the IT department, daily the fintech companies are coming. That's why by 2007, the 27 number of fintech companies will increase. At the same time, some challenges also there. I will discuss about the challenges. Small, medium and businesses, SMEs or SMBs. These organizations use open banking to automate various tasks such as reconciliation with the bank transaction, gaining clear picture and of their financial status. Today, most of the cost accountants, they may aware of the trades, TRADS, trade receivables discount schemes. All particularly the SMEs accounts are also integrated with the trades, and whether adequate balance is there or not, whether bill can be discounted or not, what is the history, whether he paid in time about the earlier bills or not. All these things are once the integration is there. Particularly this is useful for bills discounting or trade bills discounting. Some companies, fintech companies, they are doing this type of activity. For them also, this data sharing is required. For the proper growth, to maintain the liquidity of the SMEs, integration is required. Otherwise, again, I have to go to the bank. Once customer came to my company. He wants to, I'm the factoring company. Take for example, factoring company. Customer asked me to discount the bill. And the customer asked me 90%, 10% after realization of the bill, that the bill is a 30 days credit. Again, if the data is not available about his working capital, whether the working capital is a running account or dead account, whether the credits are happening or debits are happening, or whether the current account is in good condition, whether the transactions are routed to the bank or not, all these things have to be verified once the integration is there. Regulatory bodies. The organizations that enforce the financial rules, finding the open banking useful to retain standard environment. This open banking architecture also, the regulators like Reserve Bank of India, they will verify whether they are following the standards, they are following the protocols, any problems are there or not. This helps to protect customers and ensure the secure data handling practices within the financial services and industries. Regulatory bodies also, they can use this open system. E-commerce companies. Today, e-commerce companies, n number of companies are there. They are interacting with the bank servers for payment and all these things. Businesses selling products or service online can process a transaction more directly, often bypassing the traditional payment system and reducing the cost. Once the integration is there, once the service providers are accessing the customer's data, then a bank branch's workload will decrease. And the cash transactions will decrease. RTGS NEFT will decrease. Checks, the transactions will decrease. Clearing of checks also, the transactions will decrease. Accounting platforms. Financial software can access real-time transaction data, making it easier to manage accounts by reducing the need of manual data entry. Automated. Once I purchase a product, account will be debited. Then and there. No manual intervention. Thereby, the human beings working at the branches will also reduce. That's why I told about Egg Bank, EGG, Egg Bank PLC in UK. That is the highest profitable bank. No branch banking. Only IT people are running the bank. And only technology platform with a skeleton staff. And profitable bank. Software developers. Once the open banking API, software developers can create range of beneficial services, both for individual customers and business, opening up new avenues for innovation. So the open banking architecture, the data is also to be used by the software developers. So the fintech companies, particularly the fintech companies in particularly Bangalore, number of fintech companies are there. That's why recently the Andhra Pradesh state government chief minister also declared that Vizag becomes the fintech hub of the country like that. Credit lending institutions, whoever is there, whether it is a credit card or whoever is going to give the loan, small loans, the data to be accessed. Whether he is having the savings bank, what is the average balance, what are the credits that are happening in the account, what are the payments that are happening, and whether his means are there or not, means that is net worth is there or not. So the entities can foster more accurate decisions using the financial data quickly, optimizing the loan provision and credit score. In the future, the banks need not insist the balance sheet, the trading account, the profit and loss account, the cash flow, the funds flow, all these things is outdated or redundant in the future. Earlier today, while giving the working capital loans, audited a balance sheet. And once the financial year is over, 31st March, they are going to submit the balance sheet after 3 months or 4 months, even after a lot of persuasion by the bank. Benefits of open banking. What are the benefits of the open bank? The benefits of the open bank, the open banking provides a business with a variety of opportunities to improve the operations, comply more easily with regulations, and offer value-added services that can be positioned effectively for the future. Today, UPI is enjoyed by the people. Even small flowers selling a lady also, sir, don't give cash. QR code is there. Or she is showing the mobile smartphones. That's why even banks also, the financial literacy department is there. In the financial literacy, digital literacy, simultaneously they are educated the people. Why? Because to achieve the total financial inclusion of the country. What are the benefits? Data-driven decision making based on the data. Once the data is there, decision making is possible. Once garbage data is there, garbage in, garbage out. Wrong data, wrong results. Suppose you take for example, today State Bank of India is giving within 10 minutes particularly this SME loans, working capital up to 50 lakhs. If at all I ask the SME, submit your financial statement, he will submit that financial statement for banks, one financial statement, for income tax, another financial statement, for uploading an ROC, another statement. If that type of, if I am believing that GST returns, okay, there also some lapse, the lacuna may be there, but nearer to the accuracy, even 90% accuracy. If at all they are preparing 3 balance sheets for 3 different purposes, then to get the bank loan, they will show the Eastman color. To pay the tax, they will show the black and white balance sheet. So data-driven decision making. Open banking allows the business to obtain the detailed financial data that can be informed strategic from the risk assessment to investment planning. The depth of the available information surpasses the traditional financial statement. I don't ask audited balance sheet. What is that audited balance sheet? Why should I ask? Once the GST returns are there, the total turnover and all these things I can guess it. Once the banks are giving working capital and the turnover method, why should I take all these things? Operational agility. Banking, open banking accelerates the data flow. Expected transaction, quicker reconciliation, real-time basis, up to last minute, what is your sales? How much you have deposited with the bank? How much you have taken from the bank purchase for the purpose of purchases? And what is the present balance of your account? The speed of the translations translates greater adaptability in fast-paced market conditions. Interoperability collaboration. The open banking creates an environment where financial institutions, tech-driven companies, IT companies means banks are also IT come bank. IT come bank. That's why it is called fintech. Bank plus IT is equal to fintech. Fintech means financial and technology. Future banks are IT plus bank or fintech, bank plus IT. This translates a broader and more sophisticated service, offering the business to the customers. If at all I am not adopting the latest technology, business models or business methods, the banks are no more in the market. optimize the payment process. I need not recruit more cashiers. I need not recruit more clerical to process the data. Today, the open banking system, self-service delivery channels of the customer. The customer has to do his banking, not to the help of the staff of the bank. Internet banking, the customer is doing. Mobile banking, the customer is doing. Call center, customer is doing. So self-service delivery channels are very important. The open banking APIs allow more direct payment and particularly often bypassing the traditional gateways and resulting in lower transactions. The lower transaction. Today, every company or including banks, they want to reduce the cost of operations. Once the cost of in the competitive environment, revenue generation is very, very difficult and a big challenge. In that case, transaction cost has to be minimized. And regulatory alignment. Open banking frequently incorporate standard protocols. Why? Because Reserve Bank told, no, that standard protocol, that is not a standard protocol. You please implement and confirm to me. Then the third person is also involved, thereby the security features will be inbuilt, thereby the customer security will increase, risk will be mitigated. Strong data protection measures and helping the business meet regulatory requirement more easily. Once the regulator, what is the role of a regulator? To protect the customers. Even a SEBI also, what is the role of a SEBI? To protect the small investors. In the similar manner, banks are also to protect the customers and to avert or to control the functions of the bank and whatever the laid down instructions they have to follow. Customer personalization. Business can offer customized personal services to their customers. That's why when I visited to Singapore, in the Singapore, I visited one bank. In that bank, every customer, the three categories are there: high net, medium, low customers. And high net is in green, medium yellow, and red. Profitable customer to the bank or not, based on their data, based on the transactions, based on the business they have given, based on the loans they have used and repayment. The customers are either green or yellow or red. If it all green is there, then immediately the frontline staff, that is clerk, sir, branch manager asked me to ask you, sir, you please go into the branch manager's room. Why? Because he is a green customer. Green customer means it is a potential customer, he is a valuable customer, he is a high net worth individual, he is giving profit to the bank. That's why we have to give the respect or honor. So that type of systems developed based on the data. I'm not telling about the distinguish between the customers, but here the technology categorizes the customer, whether it is a low risk or medium or high risk customer in advances also. So the customer personalization. Business can offer customers customized financial services to their customers, from specialized lending solution to treasury services, or enabled rich data accessible via opening bank. Resource allocation. Simplified financial operation, mean staff. Particularly today, the wealth management branches more sophisticated and friendly and one-to-one interaction, and the meeting rooms are also there. Because general banking means low revenue to the bank, but wealth management, they are getting some commission. That's why here reallocation of staff. The staff can be reallocated And whatever, suppose I am paying per month 2 lakhs means I have to recover the amount because it is a commercial bank. CB means commercial bank, not charitable bank. Simplified financial means staff can focus on other business. Whether the automatic reconciliation or smoothing out of the invoice, open banking more effective and human resources. Once the automated systems are there, then whatever the existing staff is there, I can use the staff in a better manner. Resource allocation and market penetration. Once the open banking culture is there, or if at all I am taking the services of the fintech company, definitely my business growth will happen and penetration will happen. Open banking can help the business enter into new market. Facilitated the partnership with the local fintech companies and easily access the customer data for localized customers. That's why earlier also I told, now the Amazon is targeting the villages, going to target the villages. Because a lot of potentiality, untapped market is there. That market to be tapped by they are already tapped that particular metros or cities or towns. Now they are going to tap the unexplored potential market is villages. How to tap, how to develop the business model. Innovation as a catalyst, change agent. Once innovation is the change, the market they requires a change only. If at all I am using the outdated models, outdated or redundant business models, market capturing is very, very difficult. For business, tech and financial sectors, open banking provides a dynamic way to offer new services that can be monetized, increase the revenue streams, and customer retention is also possible. Why the people are not opening their accounts in cooperative banks? Why the people are not opening their accounts in regional rural banks? Because those banks are not that much techno savvy. Challenges. Okay. So far we have discussed it is a great, it is a number one and it is a bank will get a penetration, market share, surplus, cost reduction, all this. At the same time, open banking is also having its own disadvantages, own challenges also. Today morning, every day morning, 2 o'clock, 7 o'clock or 7:30, I am receiving calls. And in the calls, my data is already shared to some service providers. Then based on my account balance and all these things, they are telephoning. Sir, we are calling from State Bank of India and we want to tell something. If you push 9, then you will get the information. Being a banker, some of the bankers already know about the cyber frauds. They are pushing 9 also. And they are in trap and whatever the amounts are there, they will eat away the funds. Earlier, when I went to other state, they frequently daily now 4 phones. Sir, you are having one particularly one case in Bombay High Court. And if you want to know the details of the Bombay High Court case, then you press 8 or 6 or 5, whatever the number is there. If I press, then my balance will be out. So this message to be percolated because once innovations are happening, the fraudsters are also doing innovative ideas, innovative thoughts to chase or to grab the funds unauthorizedly from the genuine and hard-earned money. So open banking is also having its own challenges. What are the challenges? While open banking may offer benefits and opportunities for the innovation, it also challenges that the business and the financial institutions need to be aware of this from integration issues to security vulnerabilities. Here are some of the potential, whatever the drawbacks are there. One is inconsistent quality. Some of the fintech companies, they are providing excellent service. Some of the companies, they are not providing bad services. Thereby, the image of the bank will lost. Who is providing the customer data? The bank, not the service provider or the fintech company. So while some third-party services are excellent and others may not meet the strict standards, inconsistency in quality could lead to service interruptions, unreliable data causing operational duties, necessarily costly adjustments. That's why this is a big challenge. Not only that one, integration issues. Their configuration is a different service provider. My configuration is a different. Their protocols is different. My protocols is different. Their bandwidth is different. My bandwidth is different. If all these are synchronized, during synchronization, if differences are there, then automatically slow processes. And protocols, wrong protocols are there, the virus will attack. Once the virus is entered into my server, then it is a problem. Combining multiple third-party servers and APIs might cause unanticipated technical challenges. These complications often require specialized expertise and additional hours troubleshooting, affecting the operational timelines and potentiality increasing cost. Last week, everybody visualized or listened that in states, the Microsoft cloud, some technical issues, it was stopped, airline stop, and people are in the airports and banking transactions in the worldwide. Because most of the banks, their data is in Microsoft cloud. Once the cloud is not the functioning, then automatically the total business is a problem. So the integration issues are also there. Potential increase in the cost, limited standardization. Banks are affordability is there, because they can spend capital expenditure. But a service provider who is taking my data through the protocols or APIs, if these are not maintaining the quality or standards, then it will be a problem. The absence of universal standard complicates the way service talk. Sir, kuch nahi hota, sir, this will run, sir, no problem, sir, I can link to your server with this API. Later on only we will know. This lacks consistency of many manual intervention to ensure that the systems are compatible and functionality. Compatibility is not there. Once for the sake of that fintech company, if at all I am changing my structure in my computer data servers, then it create a problem. If at all server is halted, my banks will be, suppose the State Bank of India server is halted, 23,000, 50 crores customers are there, 50 crores customers. Nearly 1/3 of the total population, State Bank of India customers. So the customers are also, particularly all the customers of the State Bank of India will lost. So the absence of a universal standard complicates the ways service talk each other. This lack of consistency may require manual intervention. All these things are there. Regulatory hurdles. If at all I want to share the data of the customer, simply regulator will not allow. The quality, the standards, the protocols, the rules of the business, all these things, the service provided to be followed. If the service provider is not followed, the Reserve Bank of India will impose the penalty on the bank, not on the service provider. As the open banking evolves, so do regulations. Keeping updated these changes can be resource intensive. Task requires a dedicated internal team, external experts to help your business stay compact. compliant. Failing to adopt this, penalties, legal issues, all these things will happen. Accountability gaps. Okay. Problem arise. The customer will ask the bank, not the service provider. Because the ownership of the account lies with the bank only. Because I am sharing the data. If something wrong is there on the service provider, everywhere the customer will ask the bank only, not the service provider. In this, I need not particularly the accountability concept, I may not push on the customer's this. With various parties involved, determining the fault in the case of error or security breach is more complex. This ambiguity can slow down the problem solving and lead to prolonged downtime or unresolved customer issues. Suppose you take, for example, cloud is there. Microsoft Cloud is there, USA. On the day, the cloud problem, airlines, railways are also not. Number of companies, all data is Microsoft, that server is halted, unaccountable. But accountability is Microsoft. If at all people are asking whether they are capable of paying the penalty, they don't pay the capability of the penalty. That accountability concept in the particularly open banking structure is also happening. Not only that one, hidden cost. Beyond the API subscription fees, there may be the hidden cost tied in the compliance and the technical adjustments. These expenses can be mounted over time, possibility offsetting the cost saving basis. We are talking about speedy cost reduction. If at all any this type of things are happening, cost will escalate, profit will reduce. We have to study the second side of the coin, not only the first side of the coin. First side of the coin is the advantages of the open banking architecture. The second coin is the disadvantages also. Dependency risk. My customers are habituated for the POS missions or the third party bank ATMs or the third party service provider. If at all he is not doing the services, then my customers will shift my bank to another bank. Because they are habituated, they are dependent on that particular service. Outsourcing core financial service, third party service puts business under the control to some extent. If at all this person is not there, second person I have to put on as a standby. Any changes in the service availability or the terms or could necessitate abrupt the shift in the operation to use the services, which could become costly and time consuming. So banks should not completely depending on the fintech companies. Standby. If a Paytm is a problem is there, KYC compliance problem is there. If at all government is banned the Paytm, then whoever is taken the Paytm services, the fintech services, then they will face the problem. Market uncertainties. Open banking is still an evolving field, subject to changes in technology and public sentiments. These unprecedented factors could influence longer-term strategies, make it a challenge to plan with the certainty. Market uncertainty. Market always not the constant. It is a dynamic one, evolving field, and subject to changes in technology. If the old technology to be replaced with the new technology, obsolescence of the technology should be avoided. Latest technology. No, sir, that later technology is costly to me, sir. I am not in a position to acquire, my funds are not there, means if the service provider told like that, then the unprecedented, predictable factors influence the longer term strategies, making challenging to plan the uncertainties. Security vulnerables. Every day morning I am receiving call. Push that button, or one case is pending with the High Court. If you want to contact the registrar, +9 like that. If I put my funds are out. Today's cyber frauds increasing tremendously. The banks are facing two types of challenges today. One is the cyber fraud. Second one is the non-performing assets. Despite the best efforts to keep systems safe, potential gaps in data protection and security protocols be exploited. The repercussions of the data or the security breach could be extended beyond financial loss. Reputation. One bank is there, Mahesh Bank in Hyderabad. The fraudsters directly attack on the server and he grabbed that particular amount of general ledger balance, not individual customer. Individual customer may be 5,000, 10,000, 20,000 like that. But bank general ledger means the total savings bank. Conclusion. The potential of open banking elevate the customer service and generate the new revenues resources, not with added risk. Not only that one. Only 1 minute, sir. Only 1 minute, sir. Only 1 minute. Sorry for the inconvenience, sir. So here, the potential for open banking to elevate the customer service and generate a new revenue sources, not without added risk. So the banks, actually the Union Bank of India General Manager Sri Mishra sir also told about risks are more. First we have to think about the risk. If at all risks are more, along with a non-performing asset, the funds will be lost, means the bank will collapse. And business should exercise prudence. Prudential bankers, they have to mitigate the risk when adopting this technology and take stringent steps to safeguard the security and privacy. My data should not be revealed to the third parties other than the service provider. The service provider's KYC is also very, very important. If the service provider background is bad, then if my data is provided to him, then the bank image will lost. The image of the bank is very, very important. The customers are trusted the bank. The trust confidence to be built up. Okay, many benefits gained for business that enter this space thoughtfully, strategically, and with the right risk mitigation measures in place. If at all you do all these things, then the open banking architecture is a good system, good business model. In all systems, good is there, bad is also there. Suppose traveling in a flight, you will reach the destination. You will reach the destination within a short period or short span of time. If at all any problem arises, particularly in the engine, imagine what will happen. So we are traveling in technology. So lot of advantages are there. At the same time, disadvantages are there. We have to balance. We have to control the risks. Whatever the risks that are going to happen, we have to control, we have to arrest, we have to minimize. Then only the system will be, total system will be a good system. Otherwise, Once the confidence of the customer lost and the trust on the bank lost, then the image of the bank will lost, the business will lost, and the people will suffer a lot. So no more in the tomorrow's banking system. BFSI board is going to introduce the Institute of Cost Accountants of India offers the fintech company course. That is all these things are discussed there also. That is called Advanced Certification course in fintech. That is going to be introduced by the BFSI board shortly. And next webinar, that is on 2nd August 2024. That is called white label bank. That's why I put a white color label banking. White label banking, next webinar we will discuss. After that, like fintech, insurtech is also there. Financial technology banking. Insurtech means insurance technology. Insurtech is also developing fast. All these things, fintech companies, they are floating. That also interesting to learn. And when compared to bank risks, that risks are comparatively less. And that also we will discuss on the 9th August 2024. With that, the particularly all the series will be completed. So thank you very much for your kind patience listening for the last 2.5 hours. Thank you. Thank you. Good night. And if at all any questions are there, Madam will rise and I will answer the answers.
Thank you so much, sir, for such an elaborate presentation. Sir, I am sure the participants, they have many queries, but they will ask. They can ask to us. They can mail us. We will upload the presentation also in our BFSI portal as we usually do. So now, thank you so much, sir. So now I would request CMA Dibyendu Roy, sir. He is additional director and HOD of our BFSI board for the vote of thanks.
Okay, sir.
Thank you, Indrakshi. I thank from core of my heart that the presentation which Sivarama Prasad sir has given has covered the entire spectrum of open banking today, and I thank him wholeheartedly for his kind presence. I thank our chairman CMA Chittaranjan Chattopadhyay for initiating the banking month with the third webinar held today. I also thank our Vice President CMA TCS Srinivasa Prasad for his kind presence today, and our President CMA BB Nayak for his guidance and support. I also thank our chief guest or guest of honor, Sri Rishikesh Mishra, who is General Manager Risk Management, Union Bank of India, for giving the perspective of a public sector bank and the risk factors of open banking. I also thank our BFSI team members, including Indrakshi, Shantanu, and others. I also thank our IT department, CPT department, PD department for making this webinar see the light of the day. With this, I conclude today's session. Thank you.
Okay, thank you. Thank you. Good night, all, sir. Thank you.
Thank you, sir.